Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the most interesting news items in the mining space. Joining me today is John Feneck, founder and CEO of the Feneck Commodities Report. John, welcome back to Kitco.
Thanks for having me, Paul.
Now, the big news, gold has hit $3,000 per ounce as the general stock market has lost $5 trillion in value. The US administration's trade policy has caused concern among investors, leading to decline in domestic markets. John, Trump's first term was great for the stock market with the S&P 500 flying then. Trump's fine on Chinese-built ships, tariffs on this, tariffs on that, is really hitting the US economy. Why doesn't he seem to care for the markets this time around? Or is his policy perhaps more knock it down before building it up to make America great again?
I think there's a greater sense of urgency with Trump in this second term, as you can see from just last Sunday, right, which was, I guess, 10 days ago as we're recording this. So 2 Sundays ago, when on Sunday night he just said the R word, which is recession, and then markets that following Monday just responded negatively, right? It's like he is moving markets with his words and his actions. And when you see the NASDAQ down 3.8% that day on that Monday, you have to take notice of this as a client and say, wow, this is different, because a 3% plus move on any index is significant, historically in the US, going back to the Great Depression in 1929. So I said immediately to my followers and clients, this is worth noting. And if you're along the broad market right now, which we are not, you need to meet with a financial advisor immediately and ask them pointed questions about what, the landscape for their investment portfolio looks like in 2025. You can't throw darts anymore as we did in 2023 and 2024. Things are different.
Now, we're going to talk through some of the ramifications of this in the precious metal space and the base metal space. But first, let's find a positive, and that really is gold at $3,000 per ounce and pushing higher this week as well. And also, you've noted the miners are starting to break out. The GDX has broken out above resistance, as has the GDXJ. They're two of the key ETFs there, both since our last recording earlier this year, which was late January, I believe. John, why the breakout now?
It's crazy that it took $3,000 gold or 2,900 gold, whatever you want to argue, to get these stocks moving, to break through resistance. But we've been saying for months now that once GDX breaks through that 42 to 43 resistance level, it's going to go much higher. We saw it break through that, thankfully, this time without much trouble, really, just a few days ago. And now we're trading around 44.90, I believe. I think, it's going to have a path to 50 and then a path to 60 within the next 12 to 18 months. So you've got a lot of upside in the producing larger cap names that represent themselves in GDX's holdings. And then GDXJ, which has been a real disappointment, if you look at a 5, 7, 10-year chart, is just starting to get some real love here, which is great. It looks a little overbought, but at 55 or so right now, as we record this, I mean, you could see a much higher price on that because, you've got more torque in that than you do in GDX, right? You're going to have small to mid cap names in that ETF.
Now, a lot of companies say that, going back to the last cycle 10, 15 years ago, their stock prices were much higher. And so they see the potential for their share prices to go up, 50, 60, 70%. As buying comes in, they expect things, potentially could get exponential. Is that realistic?
We still think we're in a market that is not like 2020, where you could just throw darts, May, June, July, August of 2020 and make money, right? People like myself, Eric Sprott, Rick Rule were mentioning stocks and they were flying just based on us mentioning them for 30 seconds on a podcast. And we're starting to see that euphoric kind of behavior again. I do see that in certain names, but we're not seeing it across the board, Paul. And part of that is just another wave of financings, which I don't know if we'll have time to discuss today, but junior mining requires new capital all the time. And so as an investor, you have to be taking gains because companies continue to do financings. And so why take a 15% haircut if you're already up nicely on a position? You have to look at news items or work with a professional like myself to help you understand the news items to say this company only has $1 million or $2 million in the bank. They're going to need to do another raise here, and as such, you need to think about your position. If you're a trader, if you're a long-term holder for 1 or 2 years, it wouldn't really be meaningful. But it's something that, when you look at our track record, we're outperforming because we're cognizant of this and looking at these kind of news items literally every day.
John, a lot of people find it difficult to know when is the right moment to sell. I know you're kind enough to send me your newsletter. I know that you recently sold a position in a US gold developer. I'll leave it to you to name that if you choose to do so or not. But what was, the market's rising, things for gold companies in the US are positive, increasingly positive. Why did you what was your decision behind choosing to sell a US gold developer?
Sure. So 2 things. When you're in that development phase, sometimes you're kind of stuck because you're not producing yet and you're not exploring necessarily. So you're not putting out great drill results that may, bump the stock, and you're not producing. So you're not generating revenue, so that, you're kind of stuck in the middle of what we call the Lassonde curve, right? And it's not a wonderful place to be for certain developers. That said, I mean, we won't just sell like developers in general or in mass. In fact, 49% of my portfolio as of February 28th is in gold stocks and gold related, like stuff like US gold that we've talked about before, which is absolutely flying today. USAU, it's a gold copper play. It's not a pure gold play, but we consider it a gold play, right? So there's just a lot of upside in gold stocks. But to answer your question, Paul, to me, it's all about opportunity cost, right? I'm trying to lead investors because I know they have limited capital, right? So if you make 50 to 70% under your example in a stock, why not take that gain and then roll it into something that hasn't moved yet, right? It's like that's sort of our process until things start to really move as a sector in a more consistently whole way, which we're not there yet.
Okay, fair enough. Now, the $3,000 per ounce gold is also driving M&A. We saw a big deal recently with Ramalius Resources to buy smaller rival Spartan Resources in a 2.4 billion Australian, which is about 1.5 billion US, all Australian deal. Now, John, a lot of companies tell me that Australia is a more exciting market for investors, particularly retail investors, and therefore gold companies, gold exploration companies. What's your perception of that? Is Australia more attractive than Canada?
Wow. I don't really compare the two in my mind. Like, I think they're both good jurisdictions. But what I don't like about the Aussie market is the number of shares outstanding on a lot of these companies. I just can't get my head around 1 billion plus shares. And I know that's sort of like par for the course, over there. But what I would say is if you're a US or Canadian junior and you're going to get an ASX listing, that's bullish. I've seen that over and over again. And I know a couple that are planning to do that right now, which we can probably talk about on the next show. But we'll see what happens, right? Like, I think you could see more buyers in a stock like that, which will help the volumes, increase and therefore bring in, some new buying. Because a lot of investors, Paul, one of the biggest pushbacks I get is like, hey, I saw you buy this stock, John, but there's not enough volume in this. And I don't want to deal with, a thinly traded stock when I want to sell it down the road a year or two from now, which is a valid, comment. I would just encourage people, as I do with my clients, to say, look at like USAU, our example earlier, right? This was doing 30, 50,000 shares, a lot of 2023 per day. Today, it's done 500,000 shares. I mean, it's like there is going to be volume at 3,000 gold. Believe me, a lot of these stocks are going to look a lot better to investors. And that's, I think, one of the critical things to get across is that don't get too cute with the timing of your purchases. Buy stuff now that's going to be, benefiting you in a year or two from now. It's not about the perfect entry point. We get entry points wrong consistently. The difference is we buy 4 to 10 times usually on a position before we stop buying to get a really good average cost basis.
Now, let me just sort of come in with a quick question there. Position. What define a position? What does that actually mean? And how do you determine your own positions?
So when we determine our own positions, I don't sit down and say, okay, I want this much royalties, this much in explorers, developers, producers, like some people do. I'm just looking at opportunities, right? Like Goro, for example, became a position for us last year because it went from 54 cents to 15 cents in literally a week. And the news looked pretty grim for that company, GORO. We did some homework, and then they put out news that they were doing a financing, and I immediately put something out around 20 something cents to my followers and said, no company does a $2.5 million financing if they're going bankrupt. So like this is probably just an overreaction, and we're going to be adding to this position. And so we built that position from literally zero before that drop from 54 cents to now, where it's a significant position for us because they have their permits in Mexico. I think the Don David mine is something that is not just gold, it's silver too. And so like the investing public is just missing this. And so we love as value managers to find, companies that maybe aren't the best, communicators. I would argue with that stock, and put out news that you kind of have to do the second iteration of work on by making a phone call and saying, hey, tell me about this. What does this mean?
Okay, fair enough. Now, M&A is not all fun and games, of course, as Equinox Gold is finding out this week, as Van Eck, a 9% shareholder in Calibre Mining, which it is looking to buy in a merger of equals or no premium deal, said no to the acquisition. It said there's no synergies there. A number of Calibre miners have also expressed, looking at social media, that they're unhappy with the deal because Calibre is building out the Valentine mine in Newfoundland, and they're expecting a re-rate when that comes on stream in the coming months. Also, Equinox comes with a lot of debt. And I repeat, there's no premium in that deal. Very interesting there to see Van Eck being vocal about this and saying no to a transaction, John.
Hey, that's good. I like to see Joe's team do more of that, and be vocal about stuff because they have size, right? And whether in the mining business, it's not like they're a BlackRock or a Vanguard with that kind of size, but they are a big voice in our sector. And so, look, I think Calibre's done a great job. I met Darren Hall when I was speaking at Beaver Creek 3 years ago. Really sharp guy. I've known Ryan King, his corp dev guy, for a number of years, probably 6 years. Ryan always gets back to me within 48 hours. So, as a Calibre supporter, I was disappointed to see the news because Equinox is sort of the opposite. The CEO hasn't returned my call. The corp dev woman is, let's just say, dismissive. And, I just don't appreciate that.
I'm glad you said that. I should also point out that Van Eck is also a shareholder of Equinox. So presumably it likes that stock for other reasons. Takeover candidate G2 Goldfields announced an updated resource at its Oko Gold project in Guyana, increasing it to 3.1 million ounces in all categories, which is a 49% increase over last year's resource estimate. G2 is preparing for takeover by spinning out part of its property package in Guyana into G3 Goldfields. Key candidates to buy G2 include its neighbor, G Mining Ventures, which bought Reunion Gold in 2024 for the Oko West property, which it's developing, and gold miner Anglo Gold Ashanti, which already owns 15% of the junior. John, let's put you on the spot. How do you think G2 is going to play out?
Well, we were Reunion shareholders, small position, but I liked that project, and I like what they're doing in general. I don't own too much of the stock right now, but gosh, I mean, as a value manager, Paul, there's still so much value out there that when a stock moves up, I'm almost like, hey, I'm going to take some profits in this because our sector has a tendency to disappoint if you look at a long-term chart, right? So you have to be able to look at seeing 100, 200, 300% gain and saying, gosh, I have to take some of this off the table for the people that are following my portfolio. And that's kind of how I operate every single day.
Okay. John, if you could matchmake any two gold companies, who would they be and why?
Matchmake two gold companies. There's a lot of juniors that qualify for that because there's just too many junior stocks out there, and I love junior stocks. I just think that when you have uh, like so much in one sector. There's overlap, right? And there could be more synergies by combining some of these companies. Just naming two, I'm just trying to. Well, I mean, Cartier Resources comes to mind. I mean, that's ECRFF in the States. They're surrounded by a lot of players up there in that part of Canada. I've talked to Probe Gold recently. That's nearby. You saw O3 Mining get taken out by Agnico recently. By the way, Cartier has a huge position on by Agnico right now. It's over 25% of the company is owned by Agnico. So when I see stuff like that, it would make sense perhaps for some type of buyout, but again, only at a really significant premium, right? I'm not into this for a 20% premium or a merger of equals. So I've talked to Philippe, the CEO at Cartier, and he has a ton of money in this himself. The board has a lot of money in it. I have a lot of money in it. A lot of shareholders are not going to be happy or approve something that would be, a lowball offer.
Now, Cartier has I think it's the Chimbu project in the Abitibi in Quebec in Canada. Probe Mining, you mentioned those. They've just raised a ton of money, haven't they?
Yep. And it's good to see companies like U.S. Gold that we mentioned or Probe take these big packages down because let's face it, it's not been the best environment in 21 through 24 to raise money. So at higher prices, get cashed up, and then you're ready to go.
Okay, now another takeover candidate is Orion Resources or Orion Resources, depending how you pronounce that. They bought something out of left field this week with an agreement with Cobalt Metals for them to earn a 75% interest in 35 square kilometers in the eastern portion of Orion's Risti property in Finland. To do that, Cobalt will need to incur $12 million of exploration investment. Now, this deal is very much focused on critical and base metals, with Orion keeping the gold and silver interests. Cobalt is the AI-driven mining startup backed by Bill Gates and Jeff Bezos that secured over $500,000 of initial funding. John, this seems to be quite a coup for Orion and David Lotan, bringing in one of the sort of biggest and best funded names in the exploration space now.
Yeah, and I believe I met David last year at a conference, but I'm happy that an entity like Cobalt exists. It's going to bring a lot more attention to what we're doing in general, right? For generalist investors to really, Paul, in the last 60 days, I've had more generalist investors approach me than I have in 6 years. It's more and more people are like, hey, gold's breaking out. I have gold in my vault. I want to understand gold stocks and I have no clue. Good for them for reaching out because this is when you can make some serious money. A lot of these gold and silver stocks have not moved much at all yet.
Okay, now this agreement does not impact Orion's Helmi project, which is next to Rupert Resources' Ikaria deposit, and potentially that will be the subject of an M&A or some other kind of transaction at some point in the future. Let's switch to copper. First Quantum Minerals dropped its arbitration claim against Panama last week after President Molino said the company can export 120,000 tons of copper concentrate stored there, which are worth about $250 million. It seems the detente between the company and the government is thawing, but is it too late for the mine? I had the pleasure and privilege to visit Cobre Panama this week and had a big run through there with the operations manager, Carlos, who showed me everything, showed me some of the issues there. Restarting a mine as and when and if it is politically and socially possible is not going to be an easy thing. Also in the copper space this week, Freeport-McMoRan said that adding copper to the USGS critical minerals list would help it generate more than $500 million annually in tax credits tied to the US Inflation Reduction Act, which it said could help overcome having lower grades in the US than in other countries, as well as other issues. John, let's bring Donald Trump back into the conversation. He's been making a lot of noise about copper, potentially implementing tariffs specifically on copper. Tariffs on Canada and Mexico are impacting copper as well. What do you think his big picture is? Copper is the essential industrial metal. You need it in everything, not just energy transition applications. So putting things or doing things that impact the ability to produce and move copper around would seem to be quite detrimental.
Yeah, so he threatened a 25% tariff on copper. What was that, 2.5, 3 weeks ago? And on that day, I distinctly remember copper was up 5.1% in one day. That's not a copper stock like Freeport. That's copper. So, when you see a move like that, that's what we call, a breakout move. You have to buy that move because it's like, yeah, once again, I mean, as investors in this sector, I don't think you could have had a better backdrop for January, February, March. As you sat there, crying yourself to sleep in December, in our sector because the price action was so bad. Now it's so good. You have to be able to see these breakouts and say copper was like, to Goldman Sachs and Morgan Stanley and all the big boys, like the thing in 2023 and 2024, and it didn't pan out. Go back and look at the price action, Paul. Yes, we had spikes in copper price, but look how the year finished, like for 2024, really disappointing. 2023, really disappointing on an annual basis. Now this year, copper has just taken off. And so we like to search for, we own some FCX Freeport through COPX, which is the larger cap copper ETF out there. But we continue to search for copper juniors that look really undervalued because there's just so much upside here. And copper juniors have traded really poorly as a group.
Yes, and I think some of the copper juniors find it hard to fund. Some of them are very well funded, and some of them are putting out some excellent, really, really good results, which makes one question the narrative that there aren't any big deposits out there anymore.
That's a fair point. Foreign Mining is one of our holdings. And I talk to them pretty regularly, and they seem to be on track to build that and get into production in a reasonable amount of time. And you wonder, at higher copper prices, how many of these companies can get into production faster than possibly expected, right? I mean, because there's no mine out there that you can just flip a switch on and get back into production in a couple of months. It takes time, but will it take 5 to 7 years, which is sort of the rhetoric out there for copper? We'll see.
Well, the copper futures are around the $5 per pound mark, so that's certainly moving in the right direction for them. John, let's finish with you specifically. You have some conferences coming up. Tell us about them.
Sure. So I got into the conference business about 2 years ago. I've attended conferences for 25 plus years when I worked for Merrill Lynch and JP Morgan and Sprott, and I absolutely hated them because standing at a booth and being approached by people that want a teddy bear or a pair of sunglasses is just brutal. And so we don't have any booths at our conferences, Paul. We don't have any 15-minute presentations by company CEOs either, because I think that's a waste of time. So what we do is we have a networking and one-on-one bias at both conferences. We've got May 11th in Four Seasons, Fort Lauderdale, Florida. And then we have May 14th kicking off with Atlanta, Georgia at the Whitley Hotel, which is the former Ritz-Carlton, newly renovated. Both are luxury hotels. And I think that draws people, right? People want to be at a nice place, whether it's a company or a client. One of the other things we do, Paul, is 100% of our investors are accredited. We don't let people in that aren't accredited because we just don't want people there that a company is going to spend a lot of money to meet with, and then they say, "Hey, I'll buy 100 shares and start watching you." Like, that's not the type of client that we want to attract to either event. Unfortunately, there's VRIC for that. There's PDAC for that. We're not that. We're a boutique, outfit that is trying to combine. We're trying to build a menu of 30 to 40 companies per event that can actually get a lift in their stock after the event through the kind of people that we're introducing them to.
Okay, teddy bears and sunglasses. It sounds like you've been attending better conferences than I have over the past 20 years, John. John Feneck, thank you very much for joining me today.
My pleasure. Thanks, Paul.
And of course, if you like what you see, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.